Hey traders, Raghee here, and today the news is Amazon. It's all about that move in Amazon on earnings and what is one of the largest moves in history for any stock, right? As a that's a heck of a point move, right? Now, let's keep this in mind. Did Amazon go anywhere new? No. Did Amazon break the downtrend that it's in? No. Amazon is still below the 200 propulsion, the 200 exponential moving average. So it's still in the bearish hemisphere. So the question we have to ask is today's rally really something that we would buy or sell? And the answer really is it depends on the structure of the market. That has always got to be the answer. It depends on the structure of the market. So ultimately, what we have in the NASDAQ, now remember, Amazon is weighted heavily within the XL, Y, of course, and Q. Then we have the related QQQ and the S&P, right? Of course, the SPY and the ES. We know it's weighted in all of these. Think about weighting. It's so important. Today's move in Amazon did not change the structure, the bearish momentum, and the bearish trend of the NASDAQ. We are still struggling or just below the 200 exponential. We're still below the wave. And we have now plotted, since we went neutral in the wave, 3 red grab candles. And you can see how long we've been in the sea of red. And by the way, you can see how long this market has been bearish. We've been flirting with a bearish market in the NASDAQ since the 20th of January. So this is a fairly established downtrend. And Amazon's earnings were not able to change that, frankly, in any significant way, not even getting it above the 200. So then we ask ourselves, well, what about the XLY? I mean, clearly Amazon has a lot more weighting within the consumer discretionary. So maybe nope, did not take out the 200, did not break the Darvis level, heck, did not even reach the wave. This is actually a short setup, the closer we get to this Darvis resistance and into the wave. So really what Amazon has so far, as we can see done, is it's taken price action up into zones where we can get ready to short when we focus on tech. All right, well then what about the S&P? Here's the ES futures. The structure on the ES is very different. So we have to start with structure. Is Amazon influential? Yes, but so is healthcare and so are financials. Neutral, yes, a lot of bearish momentum. You can see the bearish Momo trade flag here, but a neutral trend. This is why we have to separate momentum from trend. For most traders, they're looking at it really all together. You can have a high degree of bearish momentum and still not organize into a downtrend. So here's a perfect example of a lot of bearish momentum. This doesn't mean that I want to short the S&P. I don't want to buy it necessarily either. What that means is, because it's in a range, we're going to use the automated support and resistance of the Darvis, and we're going to find the upper and lower areas of the range and wait for the market to either get up into resistance or down into support. Then we'll check on the stochastic. Take a look at the stochastic and the support. Jive pretty darn well in this area. We'll look for something similar up in here. Let price happen first, then confirm it with the secret squiggle, regardless of the secret squiggle of your choice. All right, whatever your oscillator preference is. My preference, and it has been for a couple of decades, is what I've shared with you all, the 80-20, 21-3 slow stow, set it on exponential. This is the default toss slow stow that you can find within Thinkorswim, okay? So what about the Dow? Same story as the S&P. Now, when we start thinking about S&P and Dow, we can start looking at financials. We can start taking a look at healthcare. I'm not ruling out a potential buy in either one of these individual sectors that are heavily weighted within the indices. In fact, unlike NASDAQ and S&P, where the momentum is bearish, the momentum in XLF, neutral. The momentum in XLF, bearish. But what about the momentum on the Dow? It's also bearish. So we can start to get a little bit more discerning about relative outperformance with which particular sectors, stocks, indices have bearish versus neutral momentum, right? That's an early sign in where things could be shifting up. All right, last but not least, the RTY. And like the NASDAQ, this is a confirmed, we call this double red, right? But a lot of folks don't know what I mean by double red. That means red label for the momentum, red label for the trend. And you can also see in the JT multi here, which gives us the history of this, of these market structure transitions, because they're always in some kind of flux at the momentum or at the trend level. Here you can see that red over red, red grab candles, red trade flags at the trend and the momentum level. A rip higher can be shorted into the wave. Well below the 200 exponential, that sure helps a lot. I call that the equator. We're in the bearish hemisphere, gang. So this is a short the rip. Don't care what the stochastic is doing because we are not in chop, gang. So remember to use the secret squiggles appropriately. If you have an oscillator that indicates overbought and oversold, use that in a yellow trend environment. Once we have a trend heading higher or lower, right, we can use the wave. All right, we can use the 34 EMA wave. We can use the 200. We can use the 21 exponential. We can use patterns. We can use Darvis. Where is the resistance? That then becomes the question. NASDAQ, short it. Russell, short it. XLY, short it. XLC, short it, right? Find those bearish momentum. And by the way, in a previous video, I said, hey, as long as ZN keeps heading lower, I love these shorts in tech. Today's Amazon move for me, for the structure, not my opinion. Trade what you see, right? Changes nothing. I'll see you all in the next update. Have a wonderful weekend. 9 a.m. Monday, we'll have our next Charts and Coffee show. Leave your questions, your comments, your requests. If it's a symbol, if it's a question about what are my indicators, let me know. I do check them frequently. I check the comments here. Smash that like button. Let us know we're heading in the right direction with the comments. With the content. And again, more importantly, leave those comments below. All right? I love reading them. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.